These gains are so small, we are barely in green territory, all of it happening on very light volume. In fact, New York Stock Exchange volume just 520 million shares, even less than yesterday, about half the average over the past 100 days of trading. One trader telling me today, as he was taking a break and watching some Abbott and Costello, that really, the year is already over when it comes to trading. So not much action expected today or tomorrow. Now, we are holding on to and extending the biggest December rally for the S&P since 1991, up 6.7% since the month started. It was energy stocks leading the S&P higher today, even as oil prices fell from the 26-month high where they've been trading. Tech and consumer stocks also helping keep us positive. Now, in terms of consumer, let's talk BJ Wholesale, third biggest wholesale club behind Costco and Walmart Sam's Club. New York Post today saying that Leonard Green buyout firm may make a hostile bid for the company, which has put itself up for sale, and that was after it turned down an earlier offer from Green itself. Leonard Green certainly done its share of holiday shopping, buying the craft chain Joann stores and the clothing retailer J. Crew, all of that, Pimm, just since November.
Well, Ellen, an analyst call behind the decline in financials. What was that about?
Right, and that was the weak link today, the financials. Longtime bank analyst Mike Mayo of Credit Agricole cutting fourth quarter earnings estimates for Goldman Sachs and Morgan Stanley. Essentially, if you look at the notes, he says fixed income commodity and currency, all of that trading, he says, is going to be weaker than expected. He says clients are taking less risk because of global macroeconomic concerns, also really just not wanting to take that amount of risk. And he says, though, stocks and investment banking doing just fine for these firms, in fact, estimating that Morgan Stanley's investment banking revenue is going to be up 15% from the prior quarter. Now, he does have an underperform on Morgan Stanley and a buy rating on Goldman Sachs. As for the effect on trade today, look, Goldman fell just under 1%. It's down less than 1% for the year. Morgan Stanley down 1.4%. It's off almost 8% so far this year. And for each of those, it really puts the middle of the pack among all the publicly traded brokerages. Ameriprise, Raymond James, Interactive Brokers, and Jefferies, they're up for the year. Then you've got TD Ameritrade and Morgan Stanley. Knight Capital is the worst. Pimm has lost 1/3 of its value for the year to date. Back over to you.
All right. Thank you very much, Ellen. Braitman reporting from the New York Stock Exchange. Sounds a little bit like they're already celebrating there.